How's it going, everybody? It's Stas here, and in today's video, we're going to be talking about and breaking down the top couple of stocks and ETFs that I'm personally watching and looking to trade here heading into this upcoming week in the middle of March, I guess you can say, in 2020. And I also want to go over what the markets did last week in terms of the S&P 500. Plus, I want to break down the futures here as they opened up about an hour and 15 minutes ago so we can forecast what the markets could potentially be doing heading into tomorrow's session. And in general, I want to go over some thoughts going through my head as we're getting deeper and deeper into this correction and closer into a bear market. Kind of some thoughts going through my head, whether I'm looking to buy, sell, hold on to what I have, that I'm sure you guys will find some value in those thoughts. So if you guys enjoyed this video, hit that like button, consider subscribing. Also, join our Strive Smart Discord group chat and our Strive Smart Facebook group linked down below in the description box. Plus, you can get 2 free stocks valued up to $1,400 through Webull with a deposit of $100 into the account. That is also linked down below in the description box. So let's get right into it here, starting off with the S&P 500. In under a minute, let's just take a look at what this ended up doing in last week's session, taking a look here at the 5-day, 5-minute chart. So we actually had a bit of a rally starting off here on the 2nd of March, right? And if we go back to the 10th, or not the 10th, the 10-day chart rather, we can see that that in the beginning of last week, we were in the beginning, or rather towards the end of that little rally that we had, that little rally from 28.50 up to about 31.19. So we started out the week double topped here on the S&P, and then ultimately we ended up falling quite aggressively for the past 2 days. For the last 2 days in the stock market, the S&P went from 31.30 down to about 2,900, which is from the top to bottom a 7% drop in the S&P in, again, just 2 days of trading. So quite the ugly way to end off the week there. And if you guys were paying attention, we saw some rather a lot of massive moves in many individual stocks. But if we're looking at the S&P, we saw a huge move in the last 50 minutes of the market of around 3 to 2.5 to about 3% here in the S&P, and you guys saw the same on the NASDAQ and the Dow Jones. So now that we got a little gist of what happened last week, a lot of rockiness, volatility, and a massive drop-off towards the end of the week, let's take a look at the futures. And this, guys, this is not looking too good from the bullish perspective. The bears are definitely taking over yet again in terms of these futures. As we can see, the S&P 500, the E-mini S&P 500 index futures, they're currently down at the time of this recording 4%, 119.4%. So a massive gap down here on the S&P 500 futures from around 29.60 all the way down to where we are right now, roughly at around 28.50. So this is leading me to believe that tomorrow is going to be a pretty bad day. Sure, we may bottom out and fill the gap back up tomorrow. That could end up happening, or we may consolidate a bit and head down even further, especially if we get another wave of negative news around the CV or anything just negative in general here about the economy or whatever, right? But then again, let's say the Fed comes in and we see an emergency rate cut. Who knows? We may get that full gap fill back up and we rally 3-4% tomorrow. At this point, anything can really happen, and I have a lot of cash on the sideline, like I mentioned to you guys in these videos, so I'm kind of ready for either scenario here, whether we consolidate and see another leg down or we consolidate, maybe fill the gap. I'm ready for either situation, and I'm looking to capitalize on either situation, right? So the NASDAQ at this point down 309 points, down 3.7%, so massive gap down there. A lot of tech stocks tomorrow, they're going to be hurt. Apple, Amazon, Microsoft, Facebook. Facebook's just been clobbered here, guys. Anything in the 160s, 150s for Facebook is extremely attractive. So we may be getting those type of numbers in some of these tech names heading into this week, maybe next week. That's if this sell-off really persists and continues down. So the Dow Jones at this point down almost 1,000 points in terms of the futures here, down 980 to be exact, 3.79%. So, guys, it's getting very, very bloody out there. And unfortunately, I know some people watching this video, they bought heavily in the stock market while it was at the top, while the S&P was trading near all-time highs. And they bought with all of their capital, not leaving any dry powder. So I'm getting comments, DMs like, Stas, what do I do? I'm heavily invested, don't have any more to invest with right now. And the truth is, guys, I think, in my opinion, the worst thing you can do is sell out, panic sell. That's the worst thing to do. And honestly, if you're one of those people that went heavy at the top, at this point, I would just hold and accumulate cash on the side. And if you were to pick strong companies, if you did pick strong companies when the markets were near those highs, and you accumulate some cash now, there's no reason why you shouldn't buy into those companies at a cheaper price if you were buying them at a more expensive price. So again, it all depends on whether you picked good companies. I think it's worth averaging down in the stock market, and honestly, that's what I'm personally doing right now. So let's just get into it, guys. Let's talk about some stocks that I'm watching that are on my radar, kind of the strategy that I might be going with this week in terms of, let's say, maybe some market ETFs, TVIX, and so forth. Let's just get right into it. So the first one that I want to talk about that could be a potential short here is CCL. We got some more negative news over the weekend, and if I'm glancing down, guys, you probably can't even notice. I'm just looking at some notes here on my phone. We got some news. Several Princess cruise ships were blocked from leaving or docking in an effort to contain the CV. And this has been something that's been going on for the past couple of weeks with these cruise ships. We've seen them be quarantined, people stuck in their rooms for 10 days, 2 weeks, and it's going to hurt the company, guys. Let's be honest. It's going to hurt this company even more than it's been hurting it, right? And we could very well see another massive gap down tomorrow in CCL. Maybe not a 15% gap down like we saw 2 days ago, but if we dropped another 5-10% in the stock tomorrow, maybe down to, let's say, $23-24, I would not be surprised at all. Just due to the overall pressure around the cruise ship stocks. And again, I mentioned in previous videos that you got to be careful with cyclical stocks like these. If we're nearing the end of an economic cycle, not saying that this is it, or we're seeing some heavy pressure to their earnings, to the downside, this cyclical business could get squashed. The best time to buy a cyclical company is after it's been battered down, after their earnings have been battered down, and they're starting to turn back up. And we saw that back in 2012 with CCL once we got out of that Great Recession, the economy started to stabilize a bit. We saw CCL take a massive move from 33 up to 72. And even before that, from 20, if you were to buy at 20 bucks here, it went from 20 bucks to 72. So it's very important to look at the cyclicality of these businesses, especially travel businesses and the airline stocks and airline businesses as well. Another stock that I want to talk about, I already mentioned it earlier in this video, is Facebook, ticker symbol FB. With these market futures down heavily, I expect Facebook to be down tomorrow as well, maybe down to the 173 level, which is a major support, maybe 175. But in general here with Facebook, I think it's a buy in the 150 level, 130 level, 140 level. I think anywhere down here, Facebook is a pretty strong buy due to its growth prospects, its future plan for the next 3 to 5 years. You know, if you've been following and studying the business, anything, guys, in that level is a buy. And for me, back in 2018, if you guys have been following this channel for a while, you know that I bought Facebook in the 120s, in the 130s, right? In my long-term accounts. I rode it all the way up. I trimmed a little bit of profits up into the 200s not that I advise people to do things here because I'm not a financial advisor, but I'm not against people getting into a long-term position, making 30, 40, 50%, and trimming a little bit off, trimming some profits just to play it safe or just to take some off the top and play with more house money, right? Playing with house money, if you guys know what that term means, is the best, right? Although I'm not playing with all house money now on Facebook, you know, taking a little bit off the top in profit is never a bad idea. And if we get down here closer to the 150s, 60s, I'm looking to buy into this company or buy more of this company because, again, I bought heavy in 2018 when we sold off, and I made a lot of money on the upswing. So any weakness, I'm looking to capitalize on here on ticker symbol FB. And back to that house money reference or that phrase, for those of you guys that don't know, if let's say you get into a stock for $2, it doubles to $4, and you just sell your initial investment of the $2, right? Now you're playing with house money, you're playing with profit. That's kind of what that means for those of you guys that don't know. So another stock that's getting interesting now, it's dangerous. It's dangerous because it's an industrial. This is another cyclical company, but it's Caterpillar, ticker symbol CAT. We're getting to a technical area now where if we look on this 3-year chart, we can see 120 bucks. Let me take a sip of water here, guys, very quickly. $120. This has been a support for Caterpillar over the past 2 years, since back in, I guess, maybe a year and a half. Back in October of 2018, we held it once, twice, 3, 4, 5 times, and now we're yet again at 120. This situation, though, it's a bit different with the CV, you know, the global outbreak, the tension. This can blow through 120 easily, but I'm thinking if the markets in general, let's say one of the scenarios plays out that we were talking earlier, let's say we fill the gap up tomorrow, Caterpillar could definitely be a play where, you know, we may rally from, hypothetically speaking here, let's say 120 up to maybe 123. Maybe we could get a nice little day trade there on Caterpillar. And on the downside here, if we break 120, markets get rocky, this could be a short down to, let's say, 112, 113. That's definitely possible on Caterpillar here as well. Another one that I'm liking and that I've been talking about on the channel is NVIDIA. NVIDIA overall, through all this madness, it's still holding its uptrend on the 4-hour chart here. It's holding that 180 SMA, but with this massive gap down on the futures and as they're getting uglier here as I'm recording this video, Nvidia will probably be trading somewhere in, if I had to guess, in the 240 to the 250, 255 range heading into tomorrow's session. It's most likely going to get hit, as many of these stocks are. But either way, Nvidia, it's on my watch list. I love the company, and in general, I just think it has a lot of growth prospects to it. Johnson & Johnson, as you guys saw, healthcare stocks did well last week as Joe Biden performed well, and kind of Bernie Sanders, not to get political, but the market does not like Bernie Sanders. Healthcare stocks do not like Bernie Sanders. And when, I think it was last Tuesday, Wednesday, or Thursday, you know, these healthcare stocks went bananas when Joe Biden, Super Tuesday, on Super Tuesday for Joe Biden, right? You know, we had UNH. It went ballistic. This thing went up, 5-day, 5-minute chart. We can see it went up from 260 to 295. You know, that's incredible. A move of around 13%. You know, Johnson & Johnson went up, you know, from 137 to 150, or 145 rather. Now it's hovering around 142. So for me, I'm watching J&J, UNH, you know, some of these companies here. And another one that kind of deals with the CV, a vaccine for it. And you guys actually shouted this one out to me. I've seen it in the community. It's INO. And the truth is, I'm not really into biotech stocks. You guys know that. I've never really been too much into trading them, but this is interesting. I'll be honest. This is a biotech company, again, that focuses on vaccines. It's accelerating the timeline for the development of a vaccine to treat the CV, and expects to start human trials in the U.S. in April. So this stock has been a, what is this, like a 6-bagger or a 5-bagger? So actually more like a 4 to 5-bagger. So it's gone up 400-500% roughly here in the matter of the past couple of days. So, you know, tons of momentum to the upside here. And you notice that, you know, a lot with these biotech stocks that have to do with the CV right now. This is kind of like the hot place. But for me, again, I'm not too into it. Not that I've never traded biotech stocks before, but it's not my field of not my circle of competence, but I'm not comfortable fully, you know, trading in and out of these biotech stocks quite yet. And honestly, it's not really not where I'm looking to go in terms of trading. For me, I'm sticking to what I'm good at, you know, swing trading large cap stocks, day trading these market ETFs for volatility. That's kind of where I'm at. But who knows, down the road, maybe I'll get more into biotech and get into some of these stocks that clearly have a lot of momentum to the upside. So INO for sure is worth watching here. Another company that me personally, guys, I'm loving this dip is Disney. And this, honestly, out of all my long-term positions right now, I'm talking in my 10-plus year out portfolio, you know, Disney's the one that I've been buying the most aggressively. You know, I'd say for sure Disney. You know, Boeing is one that I've been buying a decent amount of recently, if I'm being transparent with you guys. And if you do follow my M1 Finance portfolio series, where I'm building one from scratch, I actually started that back in July. You can see how I've been building it over time. You know that I'm buying these companies, Disney, Boeing, and check out that series, by the way. Go on my channel, and you can go to the playlist section, and you can see every episode, so you can see how I invest for the long term, right? So Disney, for sure, is one that I love, and with this news, not really news, but the futures gapping down aggressively, and God forbid they close down some parks here in the U.S. If they close their parks down, this stock, I just have a feeling it's going to see a flash crash back down to maybe $100. But then again, a lot of that could already be priced in, so that's one thing worth considering. But anything 100, even 95, guys, if Disney got into the 90s again, I would for sure be a heavy buyer of Disney. And it's just because I'm a believer in this long term, guys. And if we're just taking a look at the 20-year chart, Disney's at levels it hasn't been at since 2015. So you have to ask yourself, has Disney, the company, grown? Has it accumulated more assets? Has it built a bigger brand since 2015? Absolutely. Are its assets worth more than in 2015? Absolutely. So this lower stock price, or the stock price right here, buying Disney's assets right now at 115, you're getting a much better value than if you were buying them for 115 back in 2015, right? So, and plus, they've added streaming, Disney Plus, ESPN Plus, all of this stuff. I just see a lot of value in the stock price here. And if you guys disagree, I'd love to know down below in the comments why, and just in general, what are your thoughts with that? So those are just some of the main stocks I'm watching heading into this week. A bunch of other ones are, of course, Tesla. This one most likely will be hit hard tomorrow, as will Uber. If I'm just guessing here, I think Uber's going to have a pretty bad day tomorrow. If it breaks $31, we might see a fall down to $30, maybe even $29. MasterCard's another one that I'm currently in right now, ticker symbol MA. Same with Microsoft. Those are two that I'm really interested in. Again, I said Disney and Boeing, I've been buying those, but truth is I've been buying Microsoft pretty heavily, and I have a little bit of MA, MasterCard as well. And that's pretty much it, guys. You know, Netflix could be a decent play, especially since the CV doesn't really affect their revenue to the fullest extent, in my opinion, as it does with, obviously, a Carnival Cruise Line or, let's say, an airline. So that's definitely worth watching. And of course, TVIX. This is my bread and butter when there's volatility. Been trading this for about 2 years, 3 years at this point. It's just great. And with the markets down right now, futures down, this is going to be up an extraordinary amount tomorrow. Let's just put it that way. If you were to buy TVIX on Friday, I don't know if any of you watching this video did, but if you took that crazy risk, that high-flying risk of buying it at 175, you're most likely going to be up 20, 30%, 40% tomorrow. That's if the markets stay like this, and you know, you'll see. You'll see it tomorrow, and you'll be like, yep, Stas called that. TVIX is up 20, 30%. Just remember me when you see that, right? So let's go SPXS. You know, this goes up whenever the S&P is going down at a 3x rate. I'm watching this as always. And SQQQ, I'm watching this. This goes up whenever the S&P, or not the S&P, the NASDAQ is going down at a 3x rate. And to finish off the video, let's go over gold /GC, and actually, let's take a look at natural gas too. So gold just hit $1,700, up $27 here, up 1.66%. And you guys, I don't know if many of you saw my previous natural gas video. I think it only has like 400 views, so maybe you guys didn't see it, but we called this out. If you watch the video, we called this out. Natural gas was trending at around 100, or rather 1.85, $1.85, right under that 180 SMA. And we called out this D-gas entry point right around here, as we saw some selling pressure, some, you know, push to the downside here on, I think that was Thursday. You know, we talked about D-gas, DGAZ, which goes up whenever natural gas is going down. So at this point, with the gap down we're seeing natural gas here having, it's down about 3%. Tomorrow, for sure, D-gas is going to be at the top of my list when it comes to ETNs. So overall, guys, that is it for this video. If you enjoyed it, feel free to go down below, hit that like button, and also consider subscribing to the channel if you haven't done so already. And if you haven't gotten your 2 free stocks from Webull, valued up to $1,400 for one of the shares, I think, so you get 2 free stocks. One of them's $1,400. That's linked down below in the description box. All you have to do is put in $100, and you get those 2 free stocks. So go get your free money. I'll catch you all in the next video. Good luck in those markets. It's getting ugly out there. It's getting quite ugly out there, almost down 5%. So strap up, be ready, and yeah. I'll catch you all in the next video. Peace out, guys. How's it going?